Hi, good afternoon, everyone. My name is Sandeep Singh, and I'm representing here Right FX. So bear me if I do some mistake. It's my first time. Okay. So I heard a lot about what people are doing here. They are explaining you a lot about how you can trade in the market, how you can use stop loss, how you can use take profit. But I am here. I'm going to keep it very simple. I had prepared a PPT called Introduction to Forex Trading. If you are fresher, then it will help you a lot. Or maybe if you are not, then you will be familiar with these terms. Okay, so let's start with that. So what's Forex? So Forex market, as you know about it, it's a decentralized international market. So nobody can control it. Only the people, those who are trading it, they can manipulate, or they can make an impact on the market. So that's why we call it decentralized market. So there is not a single entity who can control this market. So that's why it's quite secure that you can trade in this market. And we call this Forex, FX, Spot FX, or plainly sometimes we call it spot market. So let us go back to the history from where it started. Before World War II, there is no reserve currency. People used gold as reserve currency. So after when World War II finished, so all the allied countries, they sat together and they finalized that we need a proper currency system. We need a reserve currency because we cannot be dependent on gold. So what they finalized that they will use US dollar as the reserve currency. And the second most important thing they finalized is that they created two organizations. One is International Monetary Fund and other was International Bank for Reconstruction and Development. And later it was named as World Bank, as you all know what the World Bank is. Okay, so it's quite basic what I'm going to tell you, that this is how the currencies quotations are done. You will always see currencies or any other product you're going to trade in pairs, because whenever you are going to trade, let me give you a simple example. If you want to trade like a phone, if you want to buy a phone, so when you have to buy something, you have to sell something, right? If I want to buy a cell phone, then I have to pay him or I have to sell him the dirhams or whatever currency I have to sell him, then I can buy that phone. That is called trade. That's how it works, that for every trading instrument, you will see that instrument in the pairing. Here, we are showing you Euro USD. So the price of Euro USD, it's reflecting here is 1.0676. So here, the euro is the base currency and the USD is the core currency. Core currency is the currency in which all the calculations is done. All the profit and loss calculation is done on the base of core currency, and the base currency is the currency that you are actually trading on. If you place a buy trade on Euro USD, it means you are buying euro and you are selling USD. But if you are taking an opposite trade, like you are selling Euro USD, it means you are betting a sell trade on euro and you are betting that dollar will go strong and you are buying dollar. Okay, so here you can analyze that 1 euro is equal to 1.0676 USDs. Okay, the main important thing that Forex traders that provide you, that is leverage. So leverage is something like you borrow something from broker. You don't actually borrow something from broker, that you can trade on higher volume or a higher amount with investing less money. Like if we take an example of 1:400 leverage, by investing $250 with a margin of $250, if I am correct, then you can trade up to $10,000. But we have to take note of that. Higher the leverage, higher the risk. So you have to keep your volume as low as you can to consider your profits and a loss, to analyze that. PIP. PIP is the basic unit that we use for the calculations of profits and loss. In the major currencies is the fourth decimal point. That if we use as a PIP, 1 PIP in 1 standard lot is considered as $10. In the gold, it's second decimal point. But in some currencies like USD JPY and something like that, the second decimal point is considered as the PIP. But in the major currencies, if you see, the price will show in 5 decimal points. The 5th decimal point, we call it pipettes. that is not usually considered for the calculations. Okay, that's quite simple. What is bid price and what is ask price? So when you see the platform now, you will see they will show you the bid price and the ask price. The bid price is the price where you can sell that product. Like if you see the bid price of gold, it means you can sell the gold from that very point. And if you see the ask price, you can buy the gold from that very point. And the difference between the bid price and the ask price is called spread. Okay, now we are on pending orders. I hope you know about what is buy limit, what is sell limit. So right now, let's take an example that right now the price of gold is 1633. I don't want to buy it right now. I think that it can come more down around 1600, and then I will place a buy trade. But maybe it can come today, maybe it can come tomorrow, maybe within 1 second. So what I will do, I cannot see the market 24/7. So what will I do? I will put a buy limit trade, buy limit pending order, and I will put the price of buy limit is at $1,600 of gold. So whenever the price will come, even for 0.01 seconds, microseconds or milliseconds, my trade will automatically get hit and it will come live. Until then, the trade will be in the pendings. Next, same goes with the sell limit. So let me again take the example of gold, that right now the price of gold is 1633. I don't want to sell it right now. I want to sell it at a higher price like 1650 or 1680. So what I will do, I will place a pending order. I will place a pending order at the price of 1650, and whenever the price of the gold will come at 1650 or above that, my trade will go live. So it will come out from pending orders to the live orders. Now, this is the main thing that is called buy stop and the sell stop, where the most of the clients get confused. So buy stop and the sell stop are the two pending orders that are used when the breakout happens. What happens? Let me take an example that if I say that today the second support of gold is at 1650, and if it breaks that second support, it may go higher. So what I will do, I will not put a sell trade from that price. So what I will do, if I know that from breaking that point, it can go much higher, I will put a buy stop. It means if the price of gold is at 1633 right now, and if I think that if it crosses 1650, it can go up to 1700, what I will do, I will place a buy stop limit at 1655. So if it breaks 1650 and comes to 1655, my buy trade will automatically get opened. It will be live in the market. So I can make money out of it. And opposite to buy stop, there is a pending order called sell stop. That again, I will give example of gold. That right now the price of gold is 1633, and the market is saying that if it breaks 1600, then it can come down to 1550 or 1580. So what I will do, I will put a pending order of sell stop at 1600. That if it touches that level, automatically my sell trade will get opened. Usually, these pending orders, sell stop and buy stop, are used to hedge the accounts. Okay, these are the basic calculations. How you can do the calculation using PIP. How you can do the calculations. How much margin is required. How you can do that. These are the basic calculations over there. Okay, now the most important part where people don't put their focus on over there. So the most important thing that is used in the used in the trading is called support and resistance. I don't know why people try to overcomplicate their trading by using this indicator or that indicator. What I have learned from all these years, that the support and resistance is the best indicator to use for the trading. Okay, so here you can see the support. Okay, so as you see that green line, support level is the level from which that instrument is struggling to come more down. So if I can see there, if you can see this line, here is it making the support. Here it is making the support. The price of the instrument came up to all the way to there. Then it came again here. It didn't break the level. Then it again came up, again came here, and again not breaking that level. So this is the secure line. From here I can put my buy trade and put a stop loss a little bit there. Then it will be possibility 80% chances, 70 to 80% chance that I can make a good amount of money over there, or maybe 30% chance that stop loss will hit. But support and resistance are the good points or good line or good values to trade. Same goes with resistance. Resistance is the level from which that that the pricing of that instrument is struggling to go more up. So you can bet on that that from that level, there are the majority of chances, there are the 70 to 80% chance that price will come down. So you can put a stop loss a little bit higher, and you can place your sell trade from the resistance. Usually, if I have to recommend someone, then I have to recommend clients. So I always tell them, see the pivot point of intraday, see the pivot points, and see the second support of the day, see the second resistance of the day. If the price comes around second support, go for buy without any hesitation, put a stop loss. If the price goes around second resistance, go for the sell trade with a little stop loss. You can apply that strategy. Out of 10, 8 out of 10 trades definitely will go in profits. Okay, so that's all. But you can use this strategy, and majorly you can trade in multiple instruments to diversify your risk. I would recommend try to concentrate on maximum three or four instruments, because if you try to focus on different instruments, like we are focusing on 15 to 16 instruments, I don't think that's a good way to trade. Focus on 3 or 4 instruments, like focus on gold, silver, because mostly gold and silver has the same movement, and focus on Dow Jones. Usually, 2 years back, we used to say that if the gold is going down, Dow Jones will go up. If the Dow Jones will go down, gold will go up. But nowadays, they are doing the same movement. So you can focus on the indices like Dow Jones, NASDAQ, gold and silver. Don't try to focus on 7 to 8 instruments or 10 to 15 instruments. That lead to losses. Okay, thank you.